So, Johnny, EquiBonds, a digital asset to help SMEs raise capital?
Yeah, so an EquiBond it's like a combination of a bond, a debt instrument, and an equity. And the reason for that is that with small to medium-sized businesses, what they don't want to do is necessarily generate huge amounts of profit and then pay tax on it. But what investors want is they want a return on their money. Ideally, they want a dividend, a share of the profits. So what we thought about is actually creating an EquiBond whereby the returns for investors are a percentage of the revenue. So the more the revenues grow, the better the return for the investor without necessarily creating a huge tax charge because they're having to pay dividends. So the concept is that looking at the success of crowdfunding, so it would be using the idea of crowdfunding, but having a security that gets created, which could be then traded on a secondary market, ideally a digital exchange that could be traded 24 hours a day, 7 days a week and globally. And an equity bond could be issued here in the UK, it could be issued in Europe, it could be issued in the States. And the idea is to provide a source of finance and address the challenge that we have of the IPO market is just slowing up. Ernst & Young put a report and they said that last year, the number of companies that IPO'd was down by 43%. So the idea of an equity bond is that you would take the good bits of a full-blown security or debt instrument and have the efficiency and make it faster and cheaper as a way to raise finance for small to medium-sized businesses and be aligning the entrepreneur's interests by growing a business with an investor's interest, i.e. having a percentage share in the growth of the revenues.